Dogecoin jumps percent is the awkward search phrase, but the actual move was concrete. Doge gained about 18% over the month. That outperformed the broader crypto market's roughly 10% gain, and the main signal came from large wallets. Wallets holding at least 100 million Doge reached a combined 108.52 billion Doge by the end of April. This story is less about jokes and more about concentration. The immediate pressure point is large wallet balances, 739 high-value transfers, Xetra ETP inflows, 0.115 to 0.132 cost zones, and 0.088 downside risk. Because the first reaction only matters if those signals confirm it rather than fade. The confirmed context is a record large wallet balance and a spike in high-value transfers. On April 28, there were 739 transfers worth more than $100,000 each, the highest count in 6 months. Those whale balances were valued around $11.6 billion. The move also coincided with the launch of a physical Dogecoin exchange-traded product on Xetra, giving Doge a new access route for investors using that market. This baseline keeps the story grounded in Dogecoin gained about 18% over the month, as whale wallets reached record combined balances and large transfers spiked, and prevents early attention from being treated as final proof. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is spot concentration plus access. Dogecoin jumps percent attention rises when large wallets accumulate because concentrated holders can influence supply available to the market. The technical setup also showed a break above a descending triangle, which can draw in traders looking for follow-through. But a breakout is not enough on its own. It needs continued demand, and whale wallets need to hold rather than distribute into strength. Mechanically, spot concentration, technical breakout signals, and new ETP access can amplify both interest and downside risk. That link is what turns the headline into a concrete risk, access change, liquidity test, or adoption signal. The impact is on retail buyers and Doge holders trying to read whether the move has support. Cost basis zones matter because price moving back above levels where many holders sit can reduce selling pressure. The cost basis map highlights large wallet levels around $0.115 and a broader average region near $0.132. If Doge cannot hold momentum, downside risk toward the recent 0.088 area remains part of the market map. The affected side is specific. Doge holders and new buyers need to watch whether whale demand remains supportive or turns into profit-taking. That group feels the practical consequence before the wider market has a settled answer. What remains unclear is whether the Xetra product and whale balances translate into sustained inflows. A physical ETP gives access, but access does not prove adoption. Record whale balances can support price if holders keep accumulating, but they can also increase downside risk if profit-taking starts. The confirmed data shows concentration and activity. The open question is whether that concentration becomes durable support or a future supply wall. The limit is also specific. Record balances and a breakout do not prove sustained inflows or a successful move through resistance. Keeping that limit visible prevents uncertain data from being treated as certainty. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Dogecoin jumps percent, the next signal is whether large wallet balances keep rising while transfers stay constructive. Watch the Xetra ETP access route, the 0.115 to 0.132 cost zones, and whether Doge avoids a reversal towards 0.088. The practical readout is whether whales keep absorbing supply or begin using strength to sell into new demand. A stronger follow-through would show up through large wallet balances, 739 high-value transfers, Xetra ETP inflows, 0.115 to 0.132 cost zones, and 0.088 downside risk. A weaker read would appear if those signals fade or fail to confirm.